So 1974, we went from everything looks okay to the worst recession since World War II in 4 months. Yeah. I'm thinking it's going to look similar because of the speed of the monetary tightening, the speed of the rise of prices. So I think we are going to have a very ugly few months. And after that, they will say, well, we're just going to see, and we'll see the economy start going down the toilet. And they will start thinking, well, we're not going to do QT now either. So they're not going to start shrinking the Fed balance sheet. And before you know it, we're going to be talking about rate cuts, but we don't have many rates to cut, rates are nowhere. So the only outcome is they're going to have to print money. The credit markets are already starting to dry up. That's usually an indicator. The housing market's rolling over. That's a bad indicator.
Printing money is this stuff here. You have silver coin, you have a copper coin made silver. Right.
That's right.
Basically, it's called debasing the currency, which the Romans and Chinese already did.
Yeah, because don't forget, debasement of currency works in a simple way. If you're really thirsty and I have a bottle of water, you'll pay anything for it. If you're really thirsty and I've got 5 bottles of water, you're kind of thinking, yeah, I probably need some of that water. I'll buy them all, but at a lower price. If I say, here's 1 million bottles of water, you don't want any of it because there's too much water now. It has no scarcity. So if you make too much of something, it becomes less valuable. So if Da Vinci had created 50 million pieces of art, guess what? They're worthless. And so it's that concept. And what it does is if something gets devalued versus something else, so we're not making more shares in the S&P. Actually, what we're doing is buying them back, making less of them. Therefore, the S&P goes up. Real estate. Yes, there's periods where we try and create new real estate, but generally real estate prices go up versus the Fed balance sheet because it's a relatively scarce asset. Same with gold, same with crypto. So that's the phenomena. We either go through a scenario like 2000, which was a typical old school recession where, equity markets, unwound excesses, the bear market was 18 months or so, and then the Fed keep cutting rates and eventually it stabilizes. But if we look at 2008, which was the next recession, as soon as the Fed used the Fed balance sheet, we pretty much stopped in its tracks. Happened really quite quick after they did that. They cut rates first, didn't really help because the banks had seized up. Then they used the balance sheet. Then they did it again in 2010, 12, 16, and then 18 was the Fed pivot, the Powell pivot, where they went from hiking to, oh my God, we need to cut. Well, you're going to get destroyed because of the supply chain issues, because of COVID and all of this, and your wages won't keep up. So we're going to destroy household net worth and everything's levered. So all the borrowings against houses and all the borrowings against equities and all of the borrowings on top of borrowings, and you're going to let the collateral go down and blow the entire thing up. So it's okay if you're in debt, but if you're borrowing, if you're lending money, it becomes complicated. But anyway, the point being is, so I think people have thought, well, maybe we should just try and give it directly to the people who are most affected. Okay, fine. Those are the two choices, or you do nothing, which is too late because there's too much debt. So you can't let the system clear anymore. The old way would have been you let the system clear, it's all okay, you just have a recession, everyone stops borrowing as much money, blah, 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 blah. The world is 400% of GDP in debt. The world has never been this in debt in all economic history. And what I'm saying is, regardless of your philosophy, it's difficult to find other outcomes that kind of make some sense. So let's go back to the 1940s now and figure out how bad it was then. This was the very similar setup, the worst supply chain issues, massive inflation, everybody coming back in. Well, what happened was the economy collapsed. Then interest rates came down and they stabilized. And they stabilized because the Fed stabilized them. Oh, and inflation was running slightly hot, 3%, and bond yields are about 2%. So real rates, meaning you in the property market, are going to make a lot of money. So negative real rates become very good for assets. And what happened in the 1940s and 50s was a massive economic boom. What we actually got was the value of the war debt eroding because of this financial repression. We had the value of assets like housing. The equity market went up 900% over that period of time. there was a lot of fiscal stimulus because you had to rebuild after the war and companies were building factories. So if you think of now, companies are going to be rebuilding factories in the United States or in Europe and not in China. So that's going to add some stimulus. Yes, the jobs are not there. It's robots in the factories, but it's still stimulus for the economy. The government will do some stimulus, as we've talked about. Interest rates will remain relatively low. Inflation will remain controllable, but a little bit higher than it has been. And what that sets off is a period of stability and boom because there's so much technology. There's a lot of big things happening in the world that could be. So that would be my rosy outcome, would be that. And I think that is still my highest probability, that we kind of muddle through this in a way that we don't expect because it feels like the end of the world. Imagine what it must have felt like in 1948. All you can see is the end of the world. And then you get this massive inflation. You just think this is the worst thing that could possibly happen. What actually came out of it was something very different. It was the rise of technology. It was the rise of the US as a big superpower. It was a rise of the rebuilding of Europe, the rise of Japan. It was an incredible period. Okay. It's the fourth turning, and that's where we are. And this may be the final event of the fourth turning. It may be just another phase of pushing this towards it. 2001. 2008, 2020, and maybe now. It just keeps moving the world to the direction that we all know it has to go. Is we need to stop what we're doing and change what we're doing. I think I always say the bond market is the truth. The bond market, the job of bond market participants is two things only. What is the future rate of inflation and what's economic growth? Now, in the stock market, it's like earnings and this and emotion and all of that. The bond market is simply two things. So they usually get it right. And the easiest way to look at it for most people is TLT. TLT is the bond ETF. If that starts rallying, which it's been doing strongly, before it was going down when the stock market was going down because everyone was fearing inflation. It's just switched. So bonds are now going up when the stock market goes down, which tells you the bond market's going, okay, enough's enough, guys. You've gone too far. I think the Fed come with their cannons again. Whether it happens quickly or in 3 or 6 months' time, it's coming, and the markets will start to the Pavlovian response of the cavalry's coming. And then I think it's very positive for things like cryptocurrency, probably gold, and a few other things. Real estate, I think, is going to take a while, but I don't think it's probably a big event. It got very frothy. It probably corrects somewhat. But again, I don't think the Fed or anybody else wants to see the property market go down because everyone's got the learnings from 2008. So yes, it softens a bit, etc. I think it's okay, and you'll probably get some bargains. And this is a structural shift in the global economy. We're never going back to, that chicken run of 1,000 people in an office floor. I mean, I used to work at a trading floor. The guy next to you earns $20 million a year, and he sits 3 feet from you with no privacy in this like battery hen formation of people stuffed in for the maximum productivity. That's gone. I mean, in Real Vision, there's we got offices in New York, offices in Cayman Islands, offices all over the place. Nobody goes to the bloody office. We've downsized it once and still nobody goes. It's like 3 people out of 60 go to the office every day. So it's done. Nobody's doing that again.